If there is a move in your future or someone you know, and deciding between buying a house or continuing to pay rent is still a question, please watch this video. I know from conversations I've had with people recently that there are still a lot out there that still don't understand and know all the facts about renting versus buying. And I can't stand the thought of you or someone you know needlessly throwing money away in the form of rent. If you are under the impression that buying is not an option for you, simply due to the math, the finances, please watch this video. I might be about to enlighten you. If you happen to follow my channel, you might remember I did a rent versus buy video this past summer, but it was much broader in scope than this one. It addressed pros and cons of renting and buying, and many of those, although important, were not related to the financial side of the decision. This is not a repeat of that video. Today, I'm focused on the pure math around the comparative cost to get into a new home by either renting or buying a house. Today, I'm going to show you a real example from my local market, Downriver, Michigan, comparing the cost to buy a house versus renting one just like it in the same market. Although this example compares buying a house to renting one that does not directly compare to renting an apartment or condo, the cost for those rental options are similar to the typical house rental amount you're about to see here. So this comparison would also apply to those condo and apartment options. Keep in mind, it took me all of about 5 or 10 minutes to collect this information from recent sales and rental data. So although I haven't actually done it yet, I'm confident that I could easily find similar examples of this type of scenario I'm about to share with you all over the Metro Detroit area market. Let's take a look. Okay, so let's get to the point of this video. Like I said, you're about to see some real market data from the Downriver Michigan market. A scenario that involves what's happening right now in our own backyard. This is a picture of the house that's being used for the sale in this example. We'll see more details on that in a minute. It's a home in Riverview that recently sold. But before we see that, what prompted me to make this video, what really was the last push, was when I saw this graphic, which shows what's been happening with asking rents over the course of the last 3 or 4 decades. And in particular, this sharp incline or increase in the rate at which rents have been increasing in the last 3 or 4 years. And I thought to myself, just how high do these rents have to get before the average person can see it just doesn't make sense to rent if you don't have to? Oops, I didn't mean to go to the next slide, but I guess we're going to anyway. This is the rental data I came up with to start with in the Downriver area. Let me zoom in a little bit here. You can see the communities here are a variety of different communities all around Downriver, different types of communities. So I feel pretty good about this being a representative sample of rentals or rental costs in the Downriver area. You can see the dates of all these signed rental contracts. So it's recent information. And the average, let me go down here, the average rental for this sample is about $1,400. The median's $1,400, the average just below that. So $1,400 seems like a pretty good typical rent for a home in the Downriver area. And we should take a look at this too. These are all 3-bedroom homes in Downriver. So we'll be comparing these rentals to the purchase of a 3-bedroom home in Riverview that you just saw a picture of a second ago. So let's go on to that. Here's the home we're using for this example. You can see the sale price, $150,000 on Matthew Street in Riverview. Here's a little information about the listing. It was sold on the 27th of October, a couple months ago. 3 bedrooms, 1.1 means 1.5 baths. That's what 1.5 baths looks like on the MLS. So this is a 1.5 bath home, 3 bedrooms. So very similar to the rentals we saw, and also very similar in square footage. I didn't point that out a second ago, but these are similar sized homes. Here's the square footage, 1,056. Let me see if I can go back to that other slide. Not sure how to go back. Oh, here we go. There's the square footage on all of these rentals. So they're in the neighborhood of 1,000 square feet. They vary a little bit here and there, but we're talking about comparing apples to apples here in terms of these home rentals and the purchase we're looking at here in Riverview. So let's take a look at the cost to get into this Riverview home. So to make this point that buying is an option for more people than realize that we have to take advantage of some programs out there, something other than a typical 20% down conventional loan, because if we just stuck with that, then it would be true that some people have no choice but to rent, but that is not the case. There are other options available, such as an FHA loan, where you can put as little down as 3.5% for a down payment. So that really alleviates some of the pressure for coming up with a big chunk of cash to buy your house, 3.5% versus 20% for a typical conventional loan. So this breakdown of costs is just an example. This is not like etched in stone that everybody's situation would be just like this, but this gives you a pretty good picture of the scenario I'm talking about. So there's your down payment amount for this FHA loan on this $150,000 home. Typical lender costs will vary from one lender to the next. So I decided to err on the side of caution and go high here. They will not exceed 3%. In most cases, in fact, I'm not sure they're allowed to exceed 3%, to be honest with you. So we went high end here for lender costs, around 3% of the purchase price, which in this case would be $4,500. That's where that comes from. These are the taxes you might owe depending on when you purchase the home. If you buy the home at the end of a tax year, then you really didn't own the home for any of that time, so you don't owe any taxes for that year. If you buy a home at the beginning of a tax year, then you're going to have to pay the taxes for that upcoming year because you're going to own the home during that time. So what I've done here is kind of split it down the middle, and I took the taxes for that home that you see on the listing of about $1,900, and I assumed we bought this house about right halfway through the tax year. So you'd be responsible for about half the taxes because you're only going to own the home for half the year. So that's where the $950 comes from. So with the taxes and the lender costs and all that, you would have $10,000 due at closing. Now that you might be thinking to yourself, oh, Mike, that doesn't really help me much. I don't have $10,000 in savings to buy a house. That's the problem here. That's the reason I'm renting. Well, hold on, we're not done yet. There are programs available for people in that situation to help with the down payment. The Michigan State Housing Development Authority, MSHDA, has a down payment assistance program where they will provide for you some help with your down payment. And this can be, this is as high as $7,500 in all areas that offer the program. And actually it can go up to like $10,000 in some areas. So let's just say you're approved for $5,000 for this scenario. That takes $5,000 off of this $10,000 chunk that you would have due at closing. And let's also consider that the market is shifting in the direction of balanced or normal these days. And sellers are now returning to common practices of helping buyers out, such as contributing directly to their closing costs. So it would not be unrealistic to add to the scenario that a seller wanting to sell their home throws a little cash in the direction of the buyer to help with their closing costs. So let's say the seller agrees to a request for $4,000 towards the closing costs. Now we're down to $1,700 that a buyer would have to come up with to buy this $150,000 home in Riverview. And even if the seller didn't agree to the $4,000, say they only agreed to like $2,000, that still gets this total down to like $3,700, which is way less than this $10,000 you would be expected without the assistance and the concessions. So you can see here that the amount of money this hypothetical person would have to come up with is actually less than the amount of money you would have to come up with to get into a rental like this in the Downriver area. To get into a new rental, you typically have to come up with 1.5 months rent, which based on our average rental of $1,400 would mean that you'd have to come up with $2,100 to get into a comparative rental house to the one we're buying here in Riverview. So it's actually cheaper in this case, in this scenario, to get in. And like I said, even if this seller concession amount was slightly different, we're still talking about an amount that is comparative to getting into a rental, but you'd be buying your home, which is advantageous in itself, which I'll touch on more in a minute here. So there is a very realistic scenario for the cost to get into a typical 3-bedroom home in the Downriver area compared to renting one. Here's the mortgage payment on that example. This is using the mortgage calculator that's right on my website. There's our purchase amount of $150,000, 3.5% down for the FHA loan. I use 6%, just the current market interest rate for a 30-year loan. To do this, it actually probably would be slightly lower for an FHA loan, but I'm trying to use kind of worst case scenario numbers here so it doesn't look like I'm trying to manipulate the data to fit my narrative. So I'm going conservative here, 6.2% as an interest rate, 30-year loan. This $1,900 is the actual taxes. PMI is extra insurance you have to pay for when you put down less than 20% on a loan. That's pretty common. And then I'm using $2,000 for homeowners insurance, which is probably higher than what you could actually find if you shopped around for homeowners insurance. I'm confident you could find somebody to insure that home in Riverview for less than $2,000. But like I said, I'm trying to go worst case scenario so you can see that this is a very realistic example. So with all of that information input into the calculator, your mortgage is $1,300, which is less than the average rent for a home like this downriver. So there's where the part of my title of this video comes in, that it could be cheaper for you to actually buy a house than to continue renting one. And also consider the long-term effect of this. You might think, well, there's not much of a difference there. But over the course of 30 years, this rent amount is going to go up. Your landlord is going to increase your rent at some point repeatedly throughout a 30-year stay in their home, whereas your mortgage payment is not ever going to change. So in the long run, you're paying way less to buy your home than to continue renting one similar to it in the same market. And also keep in mind, you're purchasing a home, so you're buying a multi-$100,000 asset and increasing your net worth, essentially making yourself richer while you're buying this home. Whereas if you continue to rent, the only person that's getting richer is your landlord. So keep that in mind as well as you're thinking about the rent versus buy question. Now, I realize each individual situations are unique and that there are other factors to consider here, such as whether or not any utilities are included in the rentals, the cost to maintain a home, and so on. In fact, I've done a video in the past on that very topic. If you're interested in checking that one out, here's the link to it. But just looking at the cost to get into a home, you can see in this example just how it makes sense to buy if you can. These types of scenarios are becoming more and more of a reality across many markets today due to the rapid rise in rents that we've seen in recent years. And due to various loan and down payment options that are available, buying is a much more realistic option than many people realize. If you're still trying to make the buy or rent decision, find a trusted realtor and loan officer to help you determine your options. You might be pleasantly surprised by what you find. I have plenty of useful information for buyers and first-time buyers on my website that could help you get started or answer more questions. I've included those links in the description below this video. Also, there's that other buyer versus renting pros and cons video I did right here, if you're interested and like to see more on that subject. Hit the subscribe button and notification bell if you'd like to know when I post more videos like this one or other content related to Detroit area homes and home ownership. Thanks for watching.